Hi, I'm Jared Nelson from the Investing Channel, and welcome to The Juice. To illustrate the opportunity investors can seize with banks amid rising interest rates, we're going to use Bank of America as a case study. Now, the Fed has indicated it will increase interest rates 6 times throughout 2022. This is good news for banks, as illustrated by the following data via Bank of America Investor Relations. As deposits increase, Bank of America makes more money. This is because its net interest margin will increase, leading to an increase in net interest income. Net interest margin is the difference between how much income banks generate from loans and the interest they pay out on deposits. They tend to pay borrowers based on short-term interest rates and lend at longer-term interest rates. Keep in mind, banks only need to hold a fraction of the total deposits necessary to cover the loans, known as fractional banking. That's why deposit growth is so important for banks. Bank of America addressed this on its most recent earnings call, which came prior to the aforementioned news from the Fed. The company noted that its net interest income is already above the level it was at during the middle of the Fed's last rate hike cycle. As long as loan deposits continue to grow and the Fed sticks to its plan, Bank of America should continue to perform well on this metric. Meanwhile, JP Morgan Chase expects net interest income to increase by $5.5 billion in 2022 compared to last year. Wells Fargo anticipates a roughly 8% year-over-year pop in its net interest income. Again, these projections hinge on the Fed acting as expected and other factors, such as ordinary deposit account holders keeping their money at these big banks, instead of moving it as yields become more attractive elsewhere. However, the Fed recently signaled its intentions to raise rates faster earlier. That puts forward more potential profits for banks. The bottom line is this. From a consumer standpoint, the price of just about everything, from gas to housing, paints a bearish picture. However, there's always opportunity for investors, particularly long-term investors. Banks, such as Bank of America, JP Morgan, and Wells Fargo, stand to benefit from an environment of rising interest rates, which looks to persist through 2022. Given their larger exposure to mortgages, JP and Wells Fargo don't look quite as attractive as Bank of America in this context. If you want to invest in broader baskets of financials, consider the XLF Financial ETF or the KRE Regional Bank ETF. That's all we have time for today on The Juice. Click follow and subscribe to The Juice email for your daily dose of market minerals.